Hey traders, welcome back to the channel. If you're new here, I'm DMMS Trading, and I break down everything you need to know about the markets, from strategies, news, analysis, and more. Today's video is a big one. We're diving into a hot topic that's been on many people's minds: how the American stock market could fall in 2025. If you've been following the markets closely, you know there are a lot of concerns in play right now. From inflation to rising interest rates and geopolitical issues, the market is facing a mix of potential risks that could lead to a downturn in the coming year. But the million-dollar question is, will the market really fall? And if so, how far will it drop? That's exactly what we're going to break down today. So grab your coffee, sit back, and let's dive into the key factors that could cause a market downturn in 2025. Don't forget to hit that like button, subscribe, and ring the bell for notifications so you don't miss out on any of my future videos. All right, let's get started. 1. The economic landscape in 2025. Let's start by taking a look at the broader economic landscape. The stock market doesn't exist in a vacuum. It's a reflection of the overall economy. So understanding the economic indicators that could impact the market is crucial. In 2025, we're dealing with several factors that could spell trouble for the market. 1. The Fed and interest rates. First up, the Federal Reserve. The Fed's decisions on interest rates play a huge role in how the market performs. Since 2022, the Fed has been raising interest rates aggressively to combat rising inflation. While we've seen some signs of inflation cooling, the Fed's commitment to keeping rates high could cause problems in 2025 when the Fed raises rates. Borrowing becomes more expensive, which can slow down consumer spending, corporate investment, and overall economic growth. And if the Fed keeps interest rates high in 2025, it could result in a slowdown or even a recession. Higher rates can also hurt the housing market as mortgage rates climb, which then impacts related industries like construction and real estate. 2. Inflation and its impact on purchasing power. Now, inflation, while it has been cooling down from its peak in 2022, inflation is still a concern. In fact, if inflation doesn't continue to drop, or if it rebounds, it could be a serious issue for both the economy and the stock market. High inflation erodes purchasing power. Consumers can't buy as much with their money, which leads to reduced consumer spending, one of the key drivers of economic growth. If inflation stays stubbornly high in 2025, it could create an economic environment that's hard for stocks to thrive in. 3. GDP growth and economic slowdown. Let's talk about GDP growth. In 2025, analysts are expecting a slowdown in economic growth. After the post-pandemic boom and the recovery period, it's possible that the U.S. economy could be facing a period of stagnation or even contraction in 2025. If GDP growth slows down or goes negative, it could be a strong indicator of an economic recession. And we all know what that means for the stock market: a decline in corporate earnings, layoffs, and a general loss of investor confidence. 2. Corporate earnings and the stock market. Next, let's talk about corporate earnings, which are often the most direct driver of stock prices. If companies aren't making money or meeting their earnings targets, their stock prices will likely fall. So, what can we expect in 2025? 1. The impact of higher costs. Higher interest rates aren't just bad for consumers. They're bad for businesses too. Companies that have large amounts of debt will see their borrowing costs increase as interest rates rise. This reduces their ability to invest in growth and innovation, and ultimately, it cuts into profits. Moreover, supply chain disruptions and rising commodity prices are still issues. Companies are paying more for raw materials and shipping, which eats into their profit margins. And if they can't pass those costs on to consumers due to price sensitivity, their earnings will take a hit. 2. Tech and growth stocks in trouble. Another key area to watch is the tech sector, which has been a major driver of market growth over the past decade. If the economy slows down, tech companies that rely on consumer spending or business investment in technology might struggle. Growth stocks, especially those that have benefited from easy monetary policy and low interest rates, are likely to come under pressure in 2025. If corporate earnings decline across the board, expect to see tech stocks take a hit, which could pull down the overall market. 3. Geopolitical risks and global factors. Moving on to geopolitical risks, this is a big one. We can't ignore the fact that the global environment is fraught with uncertainty. Whether it's the ongoing war in Ukraine, tensions in Asia, or other political events, geopolitics plays a huge role in market performance. 1. The war in Ukraine and its economic implications. The war in Ukraine has had significant economic repercussions worldwide, and in 2025, it's unlikely to be resolved anytime soon. The war has led to rising energy prices, supply chain issues, and global inflation. Any further escalation or prolonged conflict could continue to drive up energy prices and disrupt global trade. Oil and gas prices, which are already elevated, could rise further, impacting everything from transportation costs to consumer goods prices. That's a direct drag on the economy and subsequently the stock market. 2. China's economic slowdown. Let's not forget about China. The Chinese economy, which is the second largest in the world, has been facing significant challenges. In 2025, the Chinese economy may continue to struggle with a slowdown, real estate issues, and demographic shifts. If China's economic growth falters further, it could have a ripple effect on global markets. U.S. companies that rely on China for manufacturing or sales could be impacted, and that would send shockwaves through the global economy. 4. Investor sentiment and market psychology. The next factor we need to consider is investor sentiment. Markets are as much about psychology as they are about fundamentals. If investors start to panic or fear a recession, it can lead to a self-fulfilling prophecy, a market sell-off. 1. Fear of a recession. A lot of traders are already anticipating a recession in 2025. When that fear spreads, investors start pulling money out of stocks, and that can lead to a market decline. Investor sentiment often shifts based on headlines, rumors, and overall economic fears. If there's widespread fear of a recession, it could result in a massive sell-off, driving down stock prices and potentially triggering a larger market correction. 2. The role of media and social media. Let's not overlook the power of media and social media. In today's digital world, news travels fast, and sentiment can flip quickly. Negative news stories or viral posts on social media can cause panic, leading to quick and sharp declines in the market. 5. The possibility of a market correction or bear market. So now we know there are a lot of factors that could lead to a market downturn. But what exactly would a fall in the market look like? Let's talk about the possibility of a market correction or even a bear market in 2025. 1. What's a market correction? A market correction is typically defined as a 10% decline in major indices like the S&P 500. If the factors we discussed, rising interest rates, slowing corporate earnings, geopolitical risks all align, we could see a correction in 2025. It doesn't have to be a full-blown crash, but a correction could be enough to shake investor confidence and create a negative environment for stocks. 2. Bear market risks. A bear market is more severe, typically defined as a 20% or more drop in major indices. While not guaranteed, a combination of the factors we've discussed could lead us into bear market territory in 2025. While it's impossible to predict the future, all these elements combined could create a perfect storm for the markets. So, will the American market fall in 2025? It's hard to say for sure, but there are several risks on the horizon that could potentially trigger a downturn. If you're an investor or a trader, it's crucial to stay vigilant and adjust your strategies accordingly. Thanks for watching, and don't forget to hit that subscribe button if you want more in-depth market analysis and trading tips. Let me know in the comments what you think. Do you believe a market decline is coming in 2025? I'd love to hear your thoughts. Until next time, stay smart, stay strategic, and keep trading.